Electronic Arts, IEA, one of the world's largest and most influential video game publishers, has officially been acquired in a $55 billion mega deal, marking a historic moment in gaming and finance. This deal is notable not only for its size and structure, but also for the strategic players involved, including the Saudi public investment fund PIF, Silver Lake, and Kushner's Affinity Partners. EA's portfolio includes some of the most recognized game franchises in the world, such as FIFA/EA Sports FC, Madden NFL, Battlefield, Apex Legends, and franchises under BioWare, Respawn, and DICE. For decades, EA has been a publicly traded company on NASDAQ, influencing gaming culture, esports, and entertainment revenue worldwide. The $55 billion all-cash take-private acquisition represents the largest transaction of its kind in gaming history, surpassing previous blockbuster deals in both size and strategic significance. This acquisition signals a new era where global investment funds and private equity are reshaping the gaming landscape, aiming to leverage content, technology, and intellectual property for massive growth opportunities. This video breaks down the acquisition into 5 slides, covering breaking news, deal structure, post-acquisition plans, strategic significance, and key takeaways, giving viewers a clear understanding of why this transaction matters for gamers, investors, and the global tech ecosystem. The announcement of EA's acquisition immediately shook both the gaming and financial communities. EA has been officially acquired for $55 billion, an all-cash deal that represents the largest take-private transaction in the company's history. The deal was led by Saudi Arabia's Public Investment Fund, PIF, which has been actively investing in technology, entertainment, and sports globally, alongside Silver Lake, a prominent tech-focused private equity firm, and Kushner's Affinity Partners, a strategic investment group. Together, these investors formed a consortium to purchase EA, signaling strong confidence in the long-term growth of gaming and digital entertainment. The deal includes a 25% premium over EA's trading price, reflecting both the value of EA's intellectual property and the strategic vision of the investors. Shareholders received $210 per share, providing immediate returns while taking the company off the public market stage. Market analysts immediately noted that this acquisition cements Saudi PIF's position in global tech and entertainment. The fund has been actively expanding beyond oil and traditional investments, eyeing high-growth sectors like gaming, esports, and digital media, where EA is a major player. Gaming enthusiasts also reacted strongly. EA's franchises, from Madden NFL to Battlefield and EA Sports FC, have millions of active players worldwide, generating recurring revenue through both game sales and digital subscriptions. The acquisition is widely expected to accelerate product development, unlock creative freedom, and expand global market reach. The acquisition was structured with a combination of direct investment and leveraged financing. Approximately $36 billion in cash came directly from the consortium of investors, while JP Morgan provided around $20 billion in financing, ensuring sufficient liquidity for the acquisition. This structure allowed for a smooth transition from public to private ownership, while maintaining financial flexibility. By keeping EA private, the consortium avoids the quarterly pressures of public markets, enabling a long-term focus on innovation, franchise growth, and new revenue streams. The deal's all-cash nature is particularly noteworthy. Unlike stock-for-stock transactions, which can introduce uncertainty and valuation swings, this cash offer guaranteed immediate value to shareholders, giving them a 25% premium over the closing price prior to the announcement. This approach underscores the consortium's confidence in EA's underlying assets and future potential. Financial experts also noted that leveraging JP Morgan's financing provides tax-efficient structuring and capital for post-acquisition growth, including new game development, global expansion, and potential acquisitions of smaller studios. Analysts see this as a strategic move to consolidate EA's position in an increasingly competitive gaming market. Following the acquisition, EA will cease trading on public exchanges and transition to a fully private company. This marks a significant shift in corporate governance as EA moves from quarterly public scrutiny to a more flexible long-term planning structure. CEO Andrew Wilson will remain in charge, ensuring continuity in leadership and strategic vision. The company's headquarters will remain in Redwood City, California, a hub of gaming innovation and home to many of its core development studios. Under private ownership, EA is expected to accelerate development timelines, explore new franchise opportunities, and invest in next-generation gaming technology. Analysts expect that removing the pressure of public earnings reports will allow more experimentation in game mechanics, subscription services, and digital distribution platforms. Additionally, the private structure enables EA to pursue international expansion more aggressively. With Saudi PIF's backing, the company has deep pockets to enter emerging gaming markets, expand esports initiatives, and strengthen its digital services arm. This acquisition is significant on multiple fronts. EA owns top-tier studios such as BioWare, Respawn, and DICE, which are responsible for blockbuster games and long-running franchises. This intellectual property portfolio represents billions in potential revenue and forms the backbone of global gaming culture. Key franchises like Battlefield 6, Madden NFL, and EA Sports FC are not just games. They are cultural phenomena with millions of active users. Taking EA private allows strategic reinvestment into these franchises, expanding into new platforms, cloud gaming, mobile adaptations, and esports competitions. For Saudi PIF, this deal represents expansion into global gaming and digital entertainment, a sector that has outpaced traditional entertainment in growth over the last decade. The partnership with Silver Lake and Affinity Partners brings technical expertise, financial structuring experience, and strategic oversight. The acquisition also sends a signal to the broader market. Gaming is no longer just a consumer hobby. It's a strategic asset for global investment funds. The deal could influence mergers, acquisitions, and competitive dynamics in both the U.S. and international markets. Record-breaking deal. At $55 billion, this is the largest all-cash acquisition in gaming history, dwarfing prior deals and setting a benchmark for future transactions. Strategic global expansion. PIF expands its footprint in gaming and esports, signaling an aggressive push into high-growth digital sectors. Continuity in leadership. CEO Andrew Wilson remains in place, ensuring stability and alignment with long-term growth strategies. Private ownership advantages. Freed from quarterly market pressures, EA can prioritize creative innovation, long-term franchise growth, and international expansion. Impact on gamers and market. Players may benefit from faster updates, more immersive games, and new platforms, while investors and competitors watch closely for potential ripple effects across the industry. In conclusion, the $55 billion acquisition of EA represents a transformative moment for gaming, finance, and global strategic investment. By combining capital, expertise, and creative freedom, the consortium positions EA for long-term dominance, potentially reshaping how games are developed, distributed, and monetized worldwide.